Hi, this is Brian Resney, President of Resney Wealth Management. I'm bringing you an important update about the economy and the investment markets to keep our investors informed and up to date on what they should and should not be doing with their money. I want to talk a little bit today about gold, and I want to talk specifically about the junior gold miner GDXJ, which is the symbol for the junior gold miner. There's also the GDX, which is the senior gold miners, which would be more of a predominant large cap counterpart. Currently, fair disclosure, Resney Wealth Management does hold GDXJ within our managed accounts for our clients. We decided to pick up GDXJ for a couple of different reasons, and I wanted to talk about this. A lot of investors are talking about gold and should they add gold to their portfolio. And I think if you're going to buy gold, you really need to make sure you understand what you're doing. Gold is not going to be a buy and hold asset. It's going to be traded over time, so you need to understand that. But one of the reasons why I like the GDXJ or the gold miners more than I like gold, let me give you a couple of reasons. If you buy physical gold and gold price does not go up, your asset doesn't go up, and there is a carrying cost to buy either an ETF or physical gold. If you buy the GDXJ, I think there's a much better upside potential than just buying like the GLD, which is a representative of the gold, or buying physical gold. And let me tell you why. By buying gold miners, you have a couple different ways actually to make money. Number one, if gold prices do go up, it gives a chance for expanded margins and profits for the actual gold mining companies themselves. If prices stay the same at current levels, gold mining companies can actually make quite a bit of money over time. In fact, their margins will probably be the highest in history. Really, the third reason that I like the gold miners, and specifically the junior gold miners, is through acquisition. The larger companies, just like I talk about on my radio show and through my Resney Wealth Report each week, large cap companies, companies that are primarily the household name companies, become extremely large. And it's very hard for them to grow, internally by basically just gathering market share. So what a lot of large companies do is they basically buy out small and mid-sized companies in order to try and grow their actual revenue and asset base. Well, gold mining companies are really no different. The senior gold miners over time are going to look for ways to expand their business and to create more profitability for shareholders. One of the ways that I think they're going to do that is by acquiring small and mid-sized gold mining companies that are already extremely profitable. So you as an investor if you do want to play gold, which I think as we started to see, especially yesterday, we're starting to see some inklings of inflation coming back. I think gold will be a great way to play it, but I would rather play the gold miners. I think there's much more upside potential. And if you look at the price of physical gold and you track how physical gold is done on a performance relative basic or relative strength, which is something I've talked about before, and you match it against the junior gold miners, the junior gold miners has had substantial outperformance from physical gold. Again, because there's multiple ways, in my opinion, to make a profit on those positions. So, again, fair disclosure, we do own the GDXJ, which is the junior gold miners. Positions can't change at any point, but on a relative strength basis, that's in our radar screen right now, and we continue to add to that position. I think investors need to understand that buy and hold is not an investment strategy and is not an investment philosophy, and really is just bad investment advice. What you need to understand as an investor, there are times you do want to shake up your portfolio, and you do need to make changes within your portfolio. We continuously talk about our market trend indicators that we use, our MTI for the abbreviation. And currently on our market trend indicators, just to give you an update, most U.S.-based sectors are in the positive or buy signals, meaning our long-term trend is on the positive. On the emerging markets, some of the emerging markets are starting to roll over and have crossed under some of their short-term intermediate indicators on the market trend side. That starts to give us a warning for the long term. Now, I don't think a lot of these are going to crater, but what you're seeing is relative strength is starting to dissipate on some of the emerging markets because of, especially China, starting to raise interest rates quite a bit in the last about year. So you as an investor, I still like emerging markets long term, but to be honest, we really have very little positions in the emerging markets now because we're getting predominantly stronger relative strength in a lot of the small cap and mid cap sectors and the gold miners in the U.S. So as an investor, I've talked about this well over 2 years now, you need to be in areas that are predominantly strong, and relative strength is a great way to rank the different sectors in the not only the investment economy, but within your portfolio. If we could be of help with your portfolio, if you're unhappy with the lack of investment management that you're currently seeing within your portfolio, call our office. We'd love to sit down with you for a complimentary consultation. If you're serious about your money and your retirement, don't go it alone, and don't be sold an investment that just isn't right from you from a so-called advisor. If you're looking for actual money management with a fee-only registered investment advisor working in your best interest as a fiduciary, there's a big difference from Mr. Broker that you're maybe working with today. Give us a call. We'd love to help get your portfolio on track in a manner that's prudent for you. Until this Sunday show, make sure you have yourself an extremely profitable day.